No tax breaks on Social Security are one of the many elements in the megabill that the House of Representatives passed on Thursday that will have an impact on pensioners' financial situation. The measure, dubbed as the One Big Beautiful Bill Act, excludes the ending of the current partial taxation of Social Security income, which is something that many older folks had hoped for. Rather, the law provides older folks with some tax relief in a different manner. The entire bundle has not yet been finalized. The bill is now headed to the Senate, where it will probably undergo revisions before clearing the upper house and becoming a law signed by the president. The nonpartisan Congressional Budget Office projected Tuesday night that the tax provisions in the package would raise the budget by $3.8 trillion between 2026 and 2034. According to the CBO, the measure would reduce Medicaid, which covers 1 in 5 Americans, by around $700 billion during that time period in order to partially fund the tax cuts. The Urban Institute and Brookings Institution Tax Policy Center found that under the measure, over 80% of households would receive a tax decrease in 2026. However, according to the analysis, over one-third of the cutbacks would go to households earning $460,000 or more, and almost 60% would go to the top one-fifth of households, which earn $217,000 or more. These are a few of the clauses that would impact senior citizens. Enhanced Standard Deduction. The law increases the standard deduction, or the amount that taxpayers can deduct from their income before they are required to pay income taxes on the remaining amount, for those 65 and older. Under present law, older persons already receive a greater standard deduction, but the measure would increase it by $4,000 between 2025 and 2028. For married taxpayers filing jointly, the additional deduction starts to phase out beyond $150,000, while for individual filers, it starts at $75,000. According to Alex Durante, senior economist at the Nonpartisan Tax Foundation, this benefit is not as great as what would have been obtained if Social Security taxes had been eliminated. $500 billion in Medicare cut. Medicare, which covers 69 million persons 65 and older as well as younger people with specific medical issues, is the target of a covert cut in the measure. The increase in the deficit would lead to forced cuts known as sequestration if the reconciliation agreement is implemented in its current form and Congress does nothing else. According to the CBO, these Medicare changes would amount to almost $500 billion between 2027 and 2034. It's unclear how Medicare benefits would be impacted by these cuts. Medicaid work requirements. According to AARP, 12% of Medicaid beneficiaries in 2023 were adults between the ages of 50 and 64. With certain exclusions, the plan would mandate that Medicaid recipients between the ages of 19 and 64 work or partake in other authorized activities. According to the advocacy group Justice in Aging, many older persons would not be eligible for an exemption from these standards, despite the fact that they frequently encounter obstacles to employment in the form of health issues, age discrimination, and caregiving duties. Medicaid Home Equity Cap. The largest provider of long-term care benefits and services in the nation is Medicaid. Strict financial requirements, such as caps on home equity, must be met by older persons in order to be eligible. The plan would set the maximum permitted home equity at $1 million, which would not be adjusted for inflation, while current law permits such limitations to increase with inflation. Nursing home staffing rule. A rule from the Biden administration mandated that long-term care facilities have a registered nurse on duty at all times. That requirement's enforcement and implementation would be stopped by the reconciliation bill. Some were concerned that the rule will increase costs for nursing homes that are already trying to staff their facilities on narrow margins, even while groups like AARP praised the rule for raising standards of care. SNAP cuts. Over a 10-year period, the plan reduces food benefits by around $300 billion. In fiscal 2022, 18% of Supplemental Nutrition Assistance Program (SNAP) beneficiaries were adults 60 years of age or older. YouTube thinks you'll like the video above. Take a look and let us know in the comments. Thanks for watching the Senior News Channel. Click subscribe and never miss a new video. Please like, comment, and share. It's free and it really helps our channel.